You have executed the acceleration phase. You have neutralized the cancer of high-interest debt, ruthlessly maximize your income, and achieve a high capital conversion rate. The factory is running, generating a surplus of raw, investable dollars. This surplus is now piled up in your future fund, waiting for its deployment orders. In this chapter, we initiate the most powerful habit of the entire process, the habit of capital deployment. This is the moment you transition from being a worker who earns money to an owner whose capital works on their behalf. The goal is to build a machine, a self-replicating, self-sustaining economic engine that is indifferent to your daily labor. The first habit of deployment is systemic investment as a utility. You do not check the news, you do not wait for a perfect moment, and you do not allow market headlines to paralyze you. Investment is treated like a mandatory utility payment, like rent or electricity, that is paid first, automatically, on the same day every month, or every week, as your income arrives. Your goal is not market timing. Your goal is time in the market. The data is brutally clear. The vast majority of investor failure comes from emotional intervention, the futile attempt to outsmart forces far larger and more complex than any single individual. The wealth habit demands you surrender this illusion of control. You program the transfer from your future fund savings account directly into your core investment vehicle, and you walk away. This removes a variable of human emotion, greed when the market is rising, and panic when the market is crashing. Your primary tool in this phase is a leverage multiplier, unemotional consistency. This is best executed through dollar-cost averaging, DCA, into a diversified, low-cost asset. For most, this means broad-based index funds or ETFs that track the entire global economy. Why? Because the wealth habit is built on the predictable, relentless progress of human innovation and global productivity. You are not betting on a single company or a single sector. You are betting on the collective genius of the species to continue creating value over the next 50 years. This is the only bet with historically validated, overwhelming odds. Every automated deposit buys shares, regardless of whether the price is high or low. When prices are high, you buy fewer shares. When prices are low, when the news is screaming about recession or collapse, you buy more shares. Over time, your average cost per share declines, and your position grows exponentially. The discipline required here is visceral. The market will offer you constant opportunities to fail. When the headlines scream crash, and your portfolio value drops by 20%, every instinct honed in the zero state. Fear, the need to save what's left, the impulse to panic, will demand that you stop buying. This moment is the second crucible. This is where paper-thin commitments break, and real wealth is forged. The habit is to look at the falling numbers not as losses, but as a temporary, government-subsidized sale on the entire productive engine of the human race. You must maintain the scheduled deployment without wavering. Those who double down on their commitment during fear-driven market corrections are the ones who capture the highest rate of return, and it is the single most differentiating factor between the chronically middle class and the financially free. Your commitment must be hard, cold, and absolute. The machine must be fed, without fail, regardless of the external weather. Furthermore, you must adopt the habit of zero-based portfolio review. The only time you intervene in the machine's operation is to rebalance the architecture, typically once or twice a year, to ensure it hasn't drifted too far from your initial allocation plan. You are checking the system, not the score. The number displayed as your current net worth is irrelevant, a temporary fluctuation in the digital ether. What matters is a consistent, growing share count. Every share you own is a tiny, fractional claim on future global productivity. Your psychological anchor must shift from the monetary value to the physical count of the assets you control. When you see your share count rising month after month, you are watching the machine's power output increase, independent of whether the stock market is having a good or bad Tuesday. This consistent, unemotional action is the antidote to financial neurosis and the ultimate expression of your commitment to the long game. The greatest force in the universe is compounding interest, but its power is only unlocked by the non-negotiable habit of disciplined, timely deployment. The next stage of capital deployment is the cultivation of exponential vision, the habit of compounding visualization. Most people think linearly. They see a single deposit of $1,000 growing to $1,070 in a year, 7% return. They think, I earned $70 for doing nothing. This feels small, almost insulting. This linear thinking is what keeps them buying consumption instead of assets. The habit of exponential vision requires you to shift your perception. You must calculate and truly internalize the nonlinear path. The crucial metric is not the dollar return on your first few deposits, but the time value multiplier. You must look at that $1,000 deposit not as $70 in gains, but as a small soldier that will be compounding, earning interest on its interest for the next 30 or 40 years. That same $1,000, if allowed to compound at 7% for 35 years, becomes approximately $10,676. That is over 10 times its initial value, a gain of $9,676. Now, recognize that the dollars you deposit today are the only dollars in your entire life that will have this full 35-year compounding lifespan. The dollars you deposit next year will have 34 years. The dollars 5 years from now will have 30. The dollars of today are the most valuable dollars you will ever possess. This urgency, this knowledge of the rapidly diminishing time value, is a necessary psychological tool to ensure your capital ratio, Chapter 2, never drops. Visualize the tipping point. Early on, in the first 5 to 10 years, the machine is fragile. You are doing 95% of the work. Your earned income is overwhelmingly larger than your passive returns. The line graph of your wealth is almost flat, dominated by the linear input of your disciplined savings. This is a valley of discouragement where nearly everyone quits. But if you hold the line, the curve begins to bend. The tipping point is a specific, exhilarating moment when the money the machine generates in a given year surpasses the new capital you input from your earned income. If you deposit $20,000 this year, and the machine simultaneously generates $21,000 in dividends and capital gains, you are no longer building wealth. Wealth is building itself. At this point, the mathematical forces become overwhelming. Your financial success is no longer dependent on your daily effort. It is guaranteed by the laws of physics and mathematics. Finally, the habit of risk fortification. Deployment does not mean recklessness. It means calculated exposure. True wealth is protected wealth. Your deployment strategy must incorporate diversification, not as an academic concept, but as a fail-safe, a protective wall against the inevitable failure of any single asset class, company, or country. This means global exposure, spreading capital across different sectors and geographies, ensuring that no single economic crisis can deliver a fatal blow to your machine. Furthermore, you must maintain the integrity of your emergency fortification, 3 to 6 months of your survival number, in highly liquid, non-volatile cash. This cash is a fire extinguisher that prevents an unforeseen crisis, job loss, medical emergency, from forcing you to sell your productive assets at a loss. It ensures the machine remains whole and running, even when your personal income temporarily stops. The machine is your future. The fortification is your immediate defense. Both must be maintained with the same fanatical discipline. You are not just building wealth. You are building an economic shield of absolute personal sovereignty.